Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market and figure out what in the hell is happening to Tesla today, because it is substantially underperforming the market for really no good reason. I'm not seeing any major news that's like making this happen, or what's really making this play out. There's a lot to talk about. So regardless, let's just jump into it. If you enjoyed, don't forget to hit that like button. Again, this is not financial advice and I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below, where I'll try to guide you guys through all these kind of movements and whatnot. This is gonna be something we'll talk about for sure today. But we'll be talking about all that, so the link is below for $3 a month if you're interested. But moving right into it, Tesla closing the day down about $245 per share, which is going to be down about 4.2% on the day, which is not what you want to be seeing. Honestly, this is not good, right? This is not good at all. There's some goods. There's still some pluses. Don't get me wrong. It's not all bad news. But with that being said, I'm not gonna lie, this is a bit surprising. It's caught me a little bit off guard. I definitely expected at least some bounce at the 50-day and the 21 EMA level, right? It's like a double support with the massive volume that we've talked about many times as well. The fact that we're just slicing right through it on a very large red candle, ending at the bottom of the day on no real substantial news. And while the market is pretty much flat, something weird is going on here. Someone either big is selling, or there's something happening, or someone knows something that the public doesn't know yet. There's something weird happening with Tesla. But with that being said, let's figure out what is happening. Apparently, I wasn't bearish enough. People were complaining I'm too bearish. I wasn't bearish enough, apparently. My mistake. I should have been even more bearish. But let's figure out what the hell's happening, right? So first and foremost, let's get the bad news out of the way first, right? We're closing below the 50-day moving average. We're closing below the 21 EMA, well below them now too. Extremely not great looking candle on pretty okay volume as well. Very in-line volume. RSI is pointing straight down. MACD has crossed bearish as well. We just surprisingly sliced right through this high volume area over here. Now we're back at that infamous low 240s area that we've had many talks about before. That was it's a pretty important area as a support and a resistance. So this is definitely a major level to talk about, which can act as support. In theory, it should. The fact that this level up here hardly acted as a support is extremely surprising to me. I'll be completely honest. I did not expect that. That is just, there's definitely something weird happening here. But nonetheless, that is kind of the situation we find ourselves in for the bearish side, right? And on top of that, the option flow overall, actually, it's flipping a bit more bullish. There's a lot of really small here. So let me show you guys. As usual, I like to show you guys what I posted to my members well before in advance, right? Or well before, rather. This is what I posted before. And you can see it's a pretty bearish looking options flow over here. And it kind of makes sense. Hence the sell-off that continued, especially pretty much right after I posted this, right? But now you can see the option flow is getting very weird. It's like there's a lot of red dots, but they're all extremely small red dots. And in the sea of little tiny red dots, little fish, we have this massive whale. 3.3 million in premium, 247.5 calls expiring. What do you know it? Next Friday. And this is that right here, right? This is exactly that. So someone posted this, someone's buying the dip, right? A massive call sweep that came in over here on Tesla for next week. So they're expecting a very short-term bounce, probably Monday or Tuesday at the latest, in my opinion, which they'll most likely take profit on. So that's number one, and which is exactly what this is right here. 3.3 million. Yeah, this is 3.26, same thing, right? So that's what that is right there. So some whale is buying this dip. They're not scared. They're going headfirst right into this, which is good to see. And that's not too surprising, because as we'll discuss right now, there is potential for a definite bounce here. But unfortunately, there's also potential for this to lead into what could be not good news. So let's discuss that really quickly. So what does this all mean, and where is this all going to be taking us? So first and foremost, we talked about the bearish sides. Now the bullish sides. Options flow was one of them just now, right? We talked about the whale. Now the second thing is the fact that we have the 100-day moving average right below us, right? Not too much farther below us. I don't actually think we'll get to it, though it's not really that far from us as well, and it will continue to keep coming back up to us as well, right? So it's going to slowly meet us, probably close to 240, honestly, right? So keep that in mind. That is right below us. That's the 100-day moving average, right? The bigger the number of a moving average, the more weight it holds, the more power it holds, if that makes sense. So the 50-day moving average, as great as it is, obviously is not as strong as the 100, which isn't strong as the 200, things like that, right? So there's a lot more weight to it. So breaking below the 100-day moving average and consistently closing below it and then turning it into a potential resistance, for instance, would be worse than doing the same with the 50, right? So just take that into account, and obviously even worse for the 200. But on the flip side, it should act as a stronger support in this specific scenario as well. So that's number one. We have a pretty good support under us as well, which is of course also going to be coinciding with that 240s roughly level, 240, 242, that kind of general level, which has acted as that in the past many times as well, right here, right? So keep that in mind. That's number one. Number two, and this is pretty important. We haven't talked about this in a while because I'm a little bit surprised we got to here this fast. I thought this will happen a lot later, so I was going to discuss it later, but here we are. So there's going to be this yellow line right here, right? This is what I was discussing with my members throughout the day, but this yellow line is crucial. A lot of people probably forgot about it, but if you look at my past videos, it's always been here. I just never talked about it yet, or maybe like once, right? Because I just didn't think we needed to yet, but apparently we do. So this yellow line is essentially the downtrend that we found ourselves in post earnings, right? We had a massive rally up to pretty much almost 300 actually, wow. Then we had a massive sell-off post-earnings, then we continued selling off, had a beautiful rally, and then we kind of got rejected again and slowly kept getting rejected. As you can see, this yellow line is perfect because it just keeps getting rejected at this level. We kept hitting it until we finally gapped up on, I forgot what this news was. There was some news that gapped us up here. That was the Morgan Stanley update, I believe. The price target update, which was insane. But anyway, right? And we broke past it. The point is we broke out of it. That's the most important part. So not only did we gap fill and unfortunately close below the gap at 248, which is not great, but we are now officially retesting this breakout, which we still haven't ever since we broke out of that Morgan Stanley upgrade. We haven't retested it, right? We had a beautiful rally, kind of sideways little action, and now we're coming back to retest it, and we're only a few dollars away from truly retesting it, right? So keep that in mind. That is something to consider. So there's a decent chance that Monday starts with a red day, and then of course we get a beautiful bounce. I think hopefully, fingers crossed, around that 240, 242 level, and I think that is going to be very good to see. And I think from there we'll get a beautiful bounce towards probably back to the 260s in all honesty, right? I definitely think that we can potentially come back to the 260s. Let's check out the Fibonacci here because technically Tesla is still in an uptrend. It doesn't really feel like it is, at least, this short-term uptrend, because if you talk about it from here, right, we go from here, set a high, then we set a low, right? Somewhere around the 240, 239 area. Then we come up here, so we set a high, and now we're technically going to be setting a higher low, right? It's not a very convincing higher low, but in theory, we have an opportunity to set a higher low, which in theory can also make us go ahead and set a higher high, which can actually play out. Let me redo this quickly one more time. Give me a second. Let me go to remove this, right? So in theory, it can actually play like this. It's a little bit suspicious. I'm not going to lie. It's not the most convincing thing in the entire world, but you can go up here, set a higher high, and then we have potentially set a higher low ever so slightly. And then we could potentially come up to retest this breakdown from the blue lines, which will come back up. I mean, it would have to happen pretty quickly, which will bring us back to like 278, which I don't really see happening because that implies that it's not impossible, but there is a chance that we still come back up to get this overall retest, right? So just take that for what it's worth, right? Take that for what it's worth. I don't have a lot of faith in it personally, but that is a technical possibility. Or we just come up to the 50-day moving average, the 21 EMA, and then from there we get a rejection. But since we're technically still in an uptrend, short-term uptrend from this rally that we had recently since this lows of 210, right? If we've dropped the Fibonacci, you can see we are pretty much stopped right at that 50.5 level, right? Which is pretty much exactly where we left off, just ever so off by $1, right? And below that is the 618 level, which is pretty much 238, which is pretty much the 100-day moving average, which there's a chance that we very quickly tap and then get a beautiful bear trap into recovery as well. So that is a possibility, right? But all in all, what I am expecting here is I am expecting a bounce, right? I do expect a bounce to happen soon. Now, whether or not we go up to retest this all the way up here, which is fairly unlikely, at least it's feeling fairly unlikely, or we just come up to the 50-day moving average and the 21 EMA, which is sitting at almost at $260, right? 255, 260, somewhere around there. That can be the first target I'll look at. If we break above it, then we'll start talking about the targets all the way up here. But for now, that'll be the main thing I'll be watching as well. So take that for what it's worth as well. The 200-day moving average is well below us at $200 per share, pretty much just ever so slightly above it. So that's also important to understand. The Bollinger Bands are still actually, okay, there's a lot of lines. Let me remove it so it's not too confusing looking, right? But you can see let me remove this as well, actually, get this out. The Bollinger Bands, the green, white, and then the red lines, right? It's contracting. It is contracting. Even though we're getting some pretty volatile movement to the downside, it's actually contracting, right? So I definitely think that we're going to be getting very close to the red line here, which is coming right up to us, you can see. And I think from there, we'll get a bounce, probably get a rally back up a bit. And then from there, overall go sideways. And then we start consolidating and we start setting up for the next move. And then over the next maybe couple of weeks or so, most likely this squeeze meter is going to start initiating a squeeze, which will of course start letting us know that a massive move will be on its way. But I still think that's weeks out, hopefully to the upside, of course. But that's kind of what I am seeing right now. I see a lot of people posting bearish takes on Tesla, thinking it'll go down to about, the 100s again, low 200s. Low 200s is still a possibility, but 100s, possible, somewhat unlikely, but very possible. People are saying below 100 as well. That I don't know about, right? I don't know about that one. But for the short term-ish, I do expect a bounce from this yellow line, and that's kind of the main thing I'll be watching for next week, especially with, again, this option flow coming in as well, which is important. Now, with that being said, let's not forget on the weekly, there is still a very real possibility that we do set or we do break out of this potential bear flag from all-time highs, massive fall into a bear flag, and then we fall down even further, which will take us to about the mid 150s. That absolutely will happen and can happen, which can play out pretty much the way I have it described right here. And then I'll come back to overall retest this blue line, which will be somewhere around the mid 100s. Absolutely possible. Will it happen? Who knows? But it's possible, and it's something that you definitely want to kind of be paying attention to sort of on the side, because it's not impossible whatsoever. Now, the thing that's unfortunate too is we've been setting higher highs and higher lows until this little rejection right here, because this officially has been set a lower high. So we'll see how this plays out. If we set a lower high and then a lower low as well, so essentially if we break below 210, that's when things will start flipping a lot more bearish, because that's when we're also going to be breaking out of this potential bear flag. And that's where things will get ugly. Of course, this is a weekly chart, which means that it will take obviously a longer time for it to really play out and to, set up such a bearish situation, but it's not impossible. And the last thing I want to talk about is going to be this potential head and shoulders situation right here, which is going to be this bad boy right here, which I believe I did on the 65-minute chart. So if we go back to the 65-minute chart over here, you can see, actually, I did it on TradingView because I can actually do the crayon thing on TradingView. It's a little bit nicer. So specifically for this, but you can see on TradingView, right? Essentially, we had a beautiful rally. Then we got a rejection, beautiful rally, rejection. And now what can happen is we, again, bounce off that low 240s, and then we bounce up to somewhere around that 260 level once again, maybe even potentially gap fill at 262 over here. But all that's going to do is potentially set up the right shoulder on this head and shoulders formation, which will take about 2 weeks to set up, in my opinion, 1 to 2 weeks, about 2 weeks, I would say, give or take, which will set up the right shoulder. And then from there, we get a massive rejection. So that's going to be pretty darn bad. So definitely watch out for this. In my opinion, this is a very close watch, and I would very, very closely be watching this. Right? This is important. This is super, super important, because if it does work this way, that's gonna be very bearish, and that might actually knock us out of this potential bear flag that we are in on the weekly as well, which could be very, very bad as well. So just very important to pay attention to all these different factors, which I will be, of course, updating my members on throughout pretty much the rest of who knows when, the rest of time, I guess, as long as I'm doing this for whatever the foreseeable future is, I will be updating my members. But that's the main thing I'm looking at right now, and that's the main things that I am seeing. A bit of a longer video, but that's kind of, what I wanted to talk about. There's a lot to discuss, and that is it. So with that being said, if you enjoyed, don't forget to hit that like button. Thank you so much for watching, and of course, I'll see you not tomorrow, Monday. Peace.